Next on stage, Maritime Treasury and Focus, Risk, Liquidity, and Global Operations. Moderating the discussion, Yorgos Georgiou, news correspondent at Riviera Maritime. Joining him on stage, Andreas Plakotakis, country manager for Greece at Ebury, Chryssa Voulgari, deputy finance director at IMS Maritime, from Cyprus Effie Diakou, director treasury at Celestyal Cruises, and on behalf of the Hellenic Association of Treasurers, our vice president, Yannis Lefas. Please welcome our moderator and speakers.
Thank you. Thank you, everybody. As the panel will discuss, shipping is mostly about how you handle the unexpected, and this is what we are asked to do today. Unfortunately, Mr. Georgiou is not feeling well today, and he will not be able to join us. So there will be a small adjustment in our panel, and the moderation will be done by myself. So kindly excuse us for that. Hope you will still find this an interesting discussion. Thank you very much. So I think that important to discuss how shipping industry is considered by all of us a single sector. However, that's not exactly accurate. What we have seen is that each shipping sector it has different features that do correlate, but also do have significant variances. I personally come from a company that is focused on liquefied natural gas carriers, which is a very heavy capital-intensive sector and has its specific features and requirements. My panel and my fellow treasurers come from other shipping industries, and they have seen other requirements in what they do in their treasury functions. What we can say is that it's clearly a capital-intensive sector that requires a lot of capital, a lot of debt, significant investments from the ship owners, and also from bondholders and equity holders. That, of course, structures the way that the treasury teams will also have to operate, depending on the facilities that they have in place and all the requirements that they have from their banking institutions and other lenders and capital providers. The differences that we may see from within the different sectors in shipping is how you also charter your vessels and how you raise your revenue. Discussing about liquefied natural gas carriers, what we see is that usually we have clients with long-term charters, these oil majors that frequently come to the companies and provide 5 or 10-year charters. These, to many, might be unique because it's clear that you have a very predictable cash flow stream when it comes to your revenue side. The difficult part to predict might be the requirements on the expense side. I think that we can go to Chryssa and discuss how different angle the oil tanker sector might face, and what are the differences that you see from your experience.
First of all, I would like to thank the Hellenic Association of Treasurers for inviting me to join this panel. It's a pleasure to be here. Now, answering your question, I would say that the greatest particularity of the tanker market, the product and crude market, is its inherent volatility, as revenues and costs can shift rapidly due to various, large range of external factors. A fleet operating in the spot market especially is subject to constant fluctuations in the freight rates due to seasonal oil demand and supply dynamics, and due to vessel availability driven by fleet tonnage, by shifts in trades flow, and changes in ton-mile demand. On the cost side, fleet operating and voyage costs, such as fuel costs for spot market trading vessels, fluctuate closely with oil prices, and therefore are also subject to significant variations. Operating and voyage costs are further impacted by new environmental regulations and mostly by geopolitical tensions. Together, these factors contribute to the overall high volatility of the sector. Therefore, being a treasurer in the tanker market, the sector, is a particularly demanding role, requiring high level of situational awareness and agile financial decision-making at all times.
Effie, what about you? Coming to more impressive and fancy vessel types like the cruise ships, has the business been different from what you think that tankers and LNG carriers face in their day-to-day operations?
Yes, of course. The greatest particularity in the cash flow management of a cruise company is that the revenue is mainly driven on a retail level, rather than having contract agreements like in the rest of the shipping industry. So basically, on a daily basis, you have to deal with various passenger payments, deposits, and the onboard revenue that happens on the vessel, which on the side of the cost is easier because the costs are almost fixed. What is not predictable in our case is the revenue, because there are now not always fixed agreements in place, and you depend on the appetite of the passenger. So what we need to face on every day is liquidity, seasonality, and FX risks, and we need to manage very well in order to have smooth operations.
Very interesting. What we have heard from previous panels, of course, when it comes to risk management and the way that the treasury is handling financial risk, is how the geopolitical tension is impacting the requirements and our daily needs in handling the risk for the organizations. One thing that comes to mind, for example, is how the tension with Ukraine and Russia has impacted our treasury function. We used to have a big number of Ukrainian seafarers on board our vessels. So when the war began, we had to face, as a treasury department, that as a team that does not have operational hurdles on how to operate the vessels, we still had to find ways to make payments for the salaries of those seafarers. It was a very challenging situation that had to do with the families of people being on board vessels very far away from the situation and having to face real economical and financial challenges in such a region. And the company and, of course, the treasury team had to be there and provide solutions as those could be found at the time. Of course, this did not only affect the way that we are paying our personnel, it also has to do with how you handle your payments to your suppliers, how you stream your revenue from clients abroad, all the sanctions that followed, and these additional regulatory requirements that impacted the payment flows or the revenue flows. Have you seen similar cases in your company, Chryssa?
Yes, indeed, Yannis, and it is true that our industry faces lots of challenges in respect of geopolitical turmoil. The tanker market has also been significantly impacted by the sustained Houthi attacks in the Bab el-Mandeb Strait in the Red Sea, triggered by the Israel-Hamas conflict. As a result of this conflict and this geopolitical tension, war risk insurance premiums have doubled or even tripled, adding hundreds of thousands of dollars to total voyage costs. Because of this insurance premiums increase, because of the delays in transiting the strait, but mainly because of the heightened navigational hazard risks, owners and charterers now prefer to reroute vessels via the Cape of Good Hope. This rerouting has substantially prolonged east-west and west-east voyages, leading to significantly higher operating and voyage costs, particularly the fuel costs, and thus increased working capital requirements. Although freight rates have spiked, in order to ensure uninterrupted operations, adequate minimum liquidity buffers should be consistently maintained. Also, treasurers should conduct regularly cash flow stress testing in order to evaluate the company's resilience against such operational disruptions. Looking ahead, strategic decisions to be made for enhancing resilience against continued disruption, if we assume that the disruption continues in the short or medium future. Some of them could be the repositioning of the fleet to other regions, if possible. The contract renegotiation, the charter contracts renegotiation, for incorporating suitable war risk clauses to allow owners to decide when and where to route the vessel when the voyage involves such a potential passage through a conflict zone. In short, in the current volatile, highly volatile maritime environment, close coordination with charterers for renegotiation of contracts, with insurers for managing coverage terms, and risk exposure effectively, and with financiers to ensure transparency and alignment, is critical to maintain operational stability and financial resilience. So proactive engagement with these stakeholders is not just operationally prudent, but essential for navigating uncertainty.
Interesting. Effie, what about you? Is there any geopolitical impact for the cruise sector?
Yes, of course. Any geopolitical instability causes a big disruption to our business and impacts the cash flow directly. In case of the war in Israel or the piracy attacks in the Arabian Gulf, we were forced to change itineraries, or when time doesn't allow us, we are forced to cancel the cruises. And as you can imagine, this directly impacts the cash flow. On the revenue side, there is usually a big reduction. And while the operation costs, they maintain the same or they even increase when you have to reroute the vessel because of higher insurance premiums, as Chryssa mentioned, and also the fuel cost usually is bigger. And in case of cancellation, you need to reimburse all your clients, you need to refund or compensate for any expenses they have made. So this puts a big pressure on the cash flow. So it is very important for the Treasury to build up liquidity buffers while in a wealthy and healthy season in order to be able to face any unexpected situations like geopolitical instability, and also to be in a very close contact with the operation teams in order to have smooth business operation in general.
Out of personal curiosity, do you think that the cruise sector can face something harder than the COVID situation?
No, no, because in the COVID situation, there were no options. If you have a geopolitical situation, you might be able to examine, if you have the time, different routes. But this again requires time and a good study before you go to any new itinerary. So it's not something that can happen in a month's time. It requires at least a year of preparation. That's why you are not able to change and have a plan B, let's say, ready whenever there is an unexpected political situation.
Indeed. What one also needs to have in mind is that most shipping companies operate with dollars, and those are truly global operations and global companies. As you can imagine, our vessels touch on any port around the globe and need to pay suppliers everywhere, may dry dock their vessels in shipyards either in Asia or Europe or other places depending on where the vessels operate. And this, of course, will give rise to significant currency exposures. To introduce Andreas in the discussion, I don't know, out of the clients that you have, how many of them are shipping companies and what are the needs that you frequently come across from that perspective.
Thank you, Yanni. Indeed, we have a big footprint globally in the shipping industry. And what we have learned from this specific and very unique industry, but also from any other actually global client that we have, is that currency needs, hedging, exposure, risk management is becoming, the last many years, quite crucial. What is even more important or even more interesting is that the last couple of years we see a big trend towards non-normal currencies, non-G3 or G7, I would say non-even G20 currencies. So there you need to be able to provide solutions that are fast, efficient, and localized for this type of clients, for markets that are not very known, for markets that are difficult, in the same manner as you do in a euro-dollar hedge. So to speak, you need to provide simple forwards, and of course, automation, efficiency, and echoing voices and opinions shared from previous panels, timely manner of execution, not spot payments, but today's payments. Especially in your industry, this is a very crucial thing. You need to be paying yesterday, not tomorrow. So being able to pay today in every single region is a key element that we're focused.
Effie, was I accurate when saying that the revenue is always in dollars, or is it different?
No, for us it's different. It depends on the market where we operate. So basically, on a daily basis, we receive payments from different markets in different currencies. For example, in Europe, apart from the UK, we receive payments in euro. Then you have Asia and America paying in dollars. Australia in Australian dollars. GBP sterling is coming from the UK. So we have incomings in various currencies, and our expenses are mainly in Europe, since we operate in the Mediterranean, and also in dollars for fuels and insurance, which are major expenses, significant exposure on this type of expense. So it's quite challenging, the effects for the cruise industry. You need to try to reduce the gap. Natural hedging is the first tool for me, and then we can use forward contracts in order to try to reduce the risk, and spot transactions whenever is necessary. The aim here is to keep the FX stable, so you can follow your planning of cash flow as originally it was budgeted. Otherwise, this might cause a lot of problematic operation.
Mm-hmm. Chryssa, what about you? What is the policy? How do you handle currency risk?
We obviously operate in US dollar. Freight and higher income is mainly denominated in US dollar, as are most of our operating and financing expenses. This results in a natural revenue expense currency alignment, significantly reducing exposure to exchange risk. However, a smaller portion of our expenses is incurred in other currencies, for example, crew wages, which are often paid in seamen home currencies, Of course, port charges and agency fees worldwide, which may be settled again in local currencies that might be euro, Singapore dollar, whatever. On the other hand, onshore office overheads and payroll is always paid in euro. So for these expenses, crew wages, port charges, agency fees, and onshore office overheads and payroll, which are not matched to the revenue currency, the company may maintain bank accounts in these respective currencies, the simplest solution, or utilize multi-currency cash pools. These pools enable centralized cash management, enhance visibility, and optimize currency conversions. Of course, as already Andreas said, the forwards solution is the most common for hedging exchange risk, especially when you have to deal with specific payment days and significant amounts, where you can use an FX forward to lock in and thus mitigate the risk. Options are a more flexible solution, but yet more expensive, and applies more to needs for optionality rather than fixed coverage, I would say. One other common practice in shipping for hedging these recurring euro expenses, the office and the payroll, and in some cases the crew wages might be in euro when we speak for Greek seafarers or European, is to establish a revolving credit facility in euro. And in this way, you can minimize the conversions, so the expense is significantly reduced. I think Andreas and Effie
do you usually use your banking partners for that, or do you have other providers when you want to do your currency?
In fact, we are still
focused on your relationship.
Yes, on our relationships. Yes.
Interesting.
So. To conclude, a proper FX exposure strategy helps to lock in costs and reduce uncertainty, improving financial visibility and planning accuracy.
Good. When you have very expensive assets floating on water, it's an interesting situation, and this is when you most likely get to handle crisis, right? I mean, I guess all of us have got the question: can you send Singaporean dollars today and have it settled with the yard so that we can just leave the port because the vessel is about to depart? So this doesn't happen to other industries, and it's a rather unique place for the shipping industry. So if we were to, wrap it up on a more fortunate and happy note, what would be the things that you would have in your wish list, let's say? What would you like your banks or your other partners to provide you? What would you look to other solution providers to give you? What the things that you have in your wish list?
My wish list as a treasurer would include transparent and cost-effective FX services, both spot and forward, and of course secure and swift payments, same day, even instant payments, in multiple currencies, holding multi-currency accounts as well. And since one very important aspect in shipping is the know your customer due diligence, which has become a critical part of daily operations. And therefore, I would wish to have an automated solution, which I consider as a necessity now rather than a luxury.
There will be an interesting discussion on KYC later on.
As you are very well aware, most companies, shipping companies, still operate with manual reconciliations and fragmented banking interfaces. So a shift towards an integrated setup connecting ERP, treasury management system, and banking APIs would provide a unified, single view, real-time interface and would enable faster and optimized control and decision-making.
Understood. Effie, what would Andreas need to do to get a free ticket on a cruise ship?
Just ask me. It's simple.
I've already done.
So, Andrea, have you taken notes? What do you think? What are the things that you think that the sector is missing, and what do you think companies like yours could provide?
So I think it's becoming very, very clear from what all of the three of you said already, but also from what everyone is saying nowadays, that we need to be practical, we need to be efficient, we need to be fast, we need to resolve something yesterday, not today. We need to get rid of the bureaucracy, get rid of the paperwork. So, yes, we need to advance to a more automated world, to a more efficient world, to a world where we take the decisions. We have implemented our hedging strategy, our hedging policy, and we're putting it there to the system with a trusted partner that can act both locally and globally. And globally, meaning being a local partner in every different region. So, especially in shipping, what we see is that you need to be able to provide local solutions, like the Singapore case that you were mentioning before, or whichever other case, and also being able to streamline processes for these kind of clients, for your industry, that have thousands of payments every month, with an automated solution that can also incorporate your hedging policy.
Great. I think that we are a very unique sector. I think that people from other industries would very much like to understand and get to know us. I think that this panel has given you, the appetite to explore a bit more about what's happening in the shipping industry, which is a very traditional Greek shipping sector. We'll be happy to host additional things throughout the year through the Hellenic Association of Treasurers. Hope you found that interesting, and thank you very much. Thank you, Chryssa, thank you, Effie, thank you very much.